Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Nomi Prins. Nomi Prins is an author. She's a former Wall Street and City of London banker, and she also has spoken to the World Bank, the IMF, the Federal Reserve, and other central banks. So, Nomi, it's great to have you on the channel.
Thank you so much. It's really great to connect with you on this channel. I appreciate it.
You're welcome. And for those of you who want to know more about Nomi, I would recommend going on Prins sites. It's on Substack, right, Nomi?
Yes.
Good, great. I wanted to start with the G20. The G20 this year, the conference was in Rio, I think November 18th to 19th. And usually the public information they divulge at a G20 is just that for the public. But you were there, Nomi, in Rio, which happens to also be my hometown originally. And you got to meet people on the inside. And you've written on your Substack that there's a hidden agenda of the G20. And I thought that was really interesting. So maybe you could uh, go into detail about that.
Sure. And thank you again for that question as well. So it's interesting because you're absolutely right. And I think this year, more so than anything I've experienced before, there's that public and for public consumption set of information that comes from these big gatherings. And just to put this in context for people listening or watching right now who don't go to these things or aren't in the vicinity of them, even in the same city. There were 9,000 military and security people just basically to guard the area, which was the Museum of Modern Art in Rio, where the G20 was mainly taking place, and all the sort of people throughout Rio and the various hotels and stuff. There's quite a physical security barrier that even precedes the public information that comes out and how it's canned. And journalists are very much sort of barricaded in one area. It's not like they're sort of roaming about. It's really very contained. And so a lot of the conversations I had were sort of after hours in restaurants and so forth with some of the people involved where it wasn't so much on that sort of very um, locked in kind of premises. This started, the idea of the hidden agenda started looking at it started back in April when I was having some meetings in Brazil, in Brasilia, the capital of Brazil, with the Ministry of Finance. And some of the people there who were talking about this idea of an international payment system that would not be dollar based. So when we talk about de-dollarization in the world and there being less trade in dollars and more trade between countries, for example, in the BRICS that isn't happening in dollars. That oil trading, for example, is now 25% done not in the dollar and so forth. That all evolves. But if you can't also have a competing payment system that isn't sort of US or Eurocentric, like the current payment system or messaging system, which is SWIFT, that operates rapidly, that can connect from the central bank to the banking, to the individual, to the business level, then you're not really de-dollarizing, you're not competing. And so one of the things that has been in talks for some time has been about an international payment system that isn't in existence right now, that can utilize central bank currencies, that can connect from the bank level down to the individual level, and the mechanism and the programming, the systems, the security, and everything that's needed for that to come into play. So there was conversations that were had between the ministry and embassies in Brazil and, for example, Italy, both in the G20, who are very much looking at prototypes for having a payment system that can work across countries and that can utilize a sort of non-dollar based type of functioning. It could still potentially use dollars as one of the currencies, but it's not dependent on dollars. And Brazil itself has done a lot of development on the central bank digital currency side, as have many countries. Many countries are in various stages of development. We talk about that in the piece. But what they've done in an interesting way is also back a domestic payment system that basically connects the people to the central bank because the central bank actually owns it, which is a rarity in the world. And so one of the conversations that was had was looking at exporting, and this is still all in development, the central bank currency side of it, but exporting a system that can take central bank digital currencies, can utilize the existing successful platforms of just general payment systems without using them that retail individuals are using throughout Brazil and in different countries, and sort of connect them together. And that idea is something that nations outside the core of the G20 are actively discussing and developing and moving forward. And so that's something to definitely watch. And that was a lot of the conversation that was on. The ancillary conversation to those systems was how to protect them, cybersecurity, and other things that would be necessary components of a secure financial payment system. But those were all part of the conversations that were happening outside of sort of what was covered by the news, or like the main rooms, the main speeches, whether Biden was showing up for his photo or whatever during that entire time.
And I think this Brazilian central bank payment system is called PIX, right? PIX,
Right.
and it's used like by 199 million people. Is that right in Brazil or 90?
Uh, it's less than that, but it's used by a large percentage of the country. It's also used now, I think, by Argentina, by Uruguay. I think Colombia is looking at it. Italy has been looking at it to see if there's a way emerging payment systems and so forth. So that PIC system, what's interesting about it, you know, a lot of us know about systems like Venmo, like PayPal, systems where we are paying people and we're, connecting them to our banking accounts, and we're able to do things in different currencies across the world. They take time generally. It takes more than a nanosecond to clear, for example, a PayPal transaction or a Venmo transaction, or any type of payment systems generally. So the idea of PICs is that these things happen more instantaneously, and that the technology and the verification and the security of transactions happens more quickly. And again, PIX is owned by and created by and effectively operated by the central bank, whereas something like PayPal, Venmo, and so forth, they're operated by private companies, and they're owned by private companies. So the difference here is that connection of a financial system through the government and through the central bank, which is a unique, transformative, really event, which is going to continue to develop in financial payments.
Yeah, I mean,
Technology.
I'm not a proponent. I think CBDC is dangerous because the central bank can always do things that you can't usually do when you have cash. But I
That's
think one of the reasons we're talking about this, Nomi, and for the viewers, is that we're just trying to show how significant this could be in de-dollarization. And you used an interesting term. You said that de-dollarization is the new globalization.
right.
Could you elaborate on that and how that is going to affect the pocketbook of Americans and also people in Western Europe?
Yes, and I might add to my having written that I discussed that actually with a prominent rising economist in Brazil, Roberto Ubel, who I've known for over a decade and who has worked on research with me, and is sort of a go-to person for the international and Brazil media on economic de-dollarization, international financial affairs, and so forth. And we're discussing this, and this idea of de-dollarization is the new globalization, because we talk about countries creating all of these separate trading regions, trading blocks, to one, two globally, regionally, BRICS, and so forth. And they transcend political globalization because they are about actual money. There's politics involved in tariffs and things on trades between countries that are actually a driving force in nations wanting to have independence over how they pay each other and who they trade with. But the idea of de-dollarization as being globalization, what we're saying is that these nations are, more and more, trying to find ways to not engage in dollar-denominated payments. So they're trying to find ways to create a global currency, and they're trying to find ways to not engage in dollar-denominated payments. So they're trying to find ways to not engage in dollar-denominated payments. So they're trying to find ways to not engage in dollar-based transactions. What does that mean in practice? It gets a little wonky, but it means at some point central banks, for example, BRICS central banks or just non-dollar centric central banks, which they all are right now, will be able to move away from having dollar reserves and more to having multiple currency reserves or gold, which more and more central banks are stockpiling and so forth, as a means to back their currencies and to back the trading that they do with central banks and countries and other currencies and to back their joint financial systems. And so this is all in development. The more that happens from a technological standpoint, from an agreement standpoint around the world, the less prevalent the dollar simply is. Now, is it still the main reserve currency? Yes, but it's also declined in its percentage of presence as a reserve currency throughout central banks over the years. And as a trade currency, it's also declined, and there's been rising in trade outside of the dollar. It's not massive. It's not like it's doubling every year or anything on that scale. But certain things need to be in place, I think, for scale to occur and that sort of new globalization to happen, which is basically countries choosing their partners and de-emphasizing the dollar or the euro or just other currencies that have been stronger or more prevalent.
Yeah, it's interesting that you say that Italian prime minister met with the Brazilian president privately to talk about that. Uh, I think that there has been some speculation, I think, in the last year and a half or so that France asked to be invited to one of the BRICS conferences. I think it was last year. But yeah, that would be quite something if Italy were to get involved in that. And what's interesting to me is that I thought it was more like Russia and China that were driving this global payment system, but it seems to me that Brazil is also involved quite heavily, and they have probably the best technology.
That's what I think. And that was what I found. I mean, certainly China has its own platform, and it is certainly in a prototype version, and it continues to grow the amount of financial and businesses that can be a part of its prototype for a central bank currency and a payment system. But it also has a lot of barriers to entry. Whereas I think the philosophy that Brazil has is not to have barriers to entry. And so I think even though China and Russia are working together, they both have payment systems, but they don't have that kind of fluidity from the individual level up through the government, up through financial systems or banks, and up through the central bank that Brazil is kind of operating on. So that makes it, in a way, even though there are risks to having a CBDC and everything else that we can discuss that certainly exists in terms of privacy of information, it does mean that there's a fluidity in the entire payment structure. And I think that's more appealing to more countries. What's interesting about Italy is that when I went there in April, that was I didn't really know. I mean, obviously Italy and Brazil have a strong relationship in general. They're trading partners and so forth. But I did not know the extent to which they were looking at a joint payment system or like co-developing or just creating a greater initiative for that. And then when that came up again, and all of a sudden, you have this private meeting, and it's not just about payment systems, obviously, but it's about trade and everything. But the backbone of trading is a payment system. I mean, that's just if you can't move quickly and securely and in the new world of technologies of digital coins and everything that's happening in a seamless way, then it's just harder to have that. And so I think any conversation about trade or about natural resources or about sort of processing of them and so forth between those nations requires, in order to grow and become mature, a solid payment system, a solid joint payment system. So I thought that was actually interesting that now all of a sudden they're having this private meeting, because what I had heard at the Ministry of Finance was, the precursor to what might happen. I did not know that there was going to be that meeting, and then all of a sudden it's happening. Where a lot of other things are going around at G20, and I thought that was very interesting. There's also been a lot more investment and promises for investment by Italy in Brazil, and sort of more partnerships that are expanding, that will again require a better and stronger financial system over time. But that also gives individuals in both countries potentially more of a connection going forward, not at this moment, but in general. So it's a very interesting thing. And also Italy is a very interesting country in general relative to the rest of the EU because it does have that sort of independence vibe. It's not sort of driving the EU like Germany or like France. It kind of has the ability and has been doing this to negotiate trading agreements with China or with the BRICS, be in touch with Brazil. It's a very interesting to me uh, piece of the EU. And so the connection to Brazil, which is a huge part of the BRICS and of South America and Central America, and in the same hemisphere as the United States, is just a very interesting development to watch in global geopolitics and finance and economics.
So let's skip forward 2 or 3 weeks after the G20. Of course, Trump won the election, and he's come out already quite combative. I'm not sure if he's trying to set the negotiation up or anything, but it seems to me that he's like saying if you don't use the dollar anymore, I'm going to punish you with tariffs. Do you think it's got anything to do with what happened at G20? Do you think he has he read up on what you said, or someone at in his team is aware of that? I even saw Nomi recently that apparently he holds like $4 million or so of Ethereum, which I thought was interesting. And now there's all this talk that the US wants to create a Bitcoin reserve, which I think is really strange. So maybe if we could switch over to the US and after that we'll look at what you think of the economy, the markets, gold and silver for the new year.
Sure. So, yeah, just on all those elements, I don't know if Trump or his people are reading my pieces or these listening to your conversations about de-dollarization, but I think the concept strikes a nerve with the administration who wants to basically have the U.S. be, at the sort of top of everything, and that would include having the US dollar, stay in the prevalent spot. And again, for the time being and probably in our lifetimes, it will continue to be the major reserve currency. I don't think it's possible to tariff 100% every single country that doesn't do all of its transactions in dollars. That's just simply not practical. I mean, that's actually impossible because you would have to, in practice, monitor all of their trade with each other, every piece of every product, and all the products we use come from so many places in the world, from the mined metal that's inside, my Mac to the permanent magnets that are sort of in there operating things to the what's going on in the screen to the lights to the electricity that's allowing us to even have this conversation to I mean there's so many pieces to a supply chain and to infrastructure that allows a supply chain to exist that actually putting a tariff on every single one of the pieces that doesn't uh, work, that doesn't really base itself in dollars is just not really possible. So I mean it's just not possible. What can happen is and probably will happen is we are going to enter sort of a heightened period of tariff wars in areas that are significantly important to the US relative to China, in terms of resources, in terms of certain sort of national defense oriented products, whether it's from semiconductors through to drones. But in the process, a couple things are going to happen. And it should be noted that in the initial Trump 1.0 tariffs, we did see higher prices on a lot of things. We saw some lowering of prices where the supply chain was mostly in the United States to begin with, and it could be more controlled. But the minute you have it all over the place, you kind of can't control prices along the chain. But we also saw tit for tat. We also saw anxiety levels increase between countries, and we saw the beginning of the acceleration of these de-dollarization. We saw more trade agreements between BRICS countries, between other countries, and so forth, off the U.S. to basically, purely economically hedge themselves against, potentially not having as many of their products going to the United States because of the higher tariffs. And we also saw, of course, consumers on all end having to pay more as a result. That said, the Biden administration continued a lot of those tariffs as well, and raised some of them. And the Trump administration has promised to raise more of them. So China has already retaliated by saying, all right, well, then we're gonna put, a restriction on on drone exports to the United States, which we get a lot from them in pre-retaliation for tariffs going into place, which will increase tariffs on some of Chinese products. So this is going to be the new normal. It's not new in general because we have seen tariffs rise by both administrations since 2017 and in anticipation of them in 2016 retaliations, and that's just going to continue. In terms of Bitcoin, in terms of having a Bitcoin reserve, or if Trump owns a portion of Ethereum or Bitcoin, I think in general Bitcoin is too volatile an instrument um, to have it be a reliable reserve component. I mean, it's fine when it's risen in the last couple of years from 27,000 to 100 and 5,000 right now. And when that's happening, it looks like your reserve is growing. It's going in one direction and it can be relied upon. But the reality is Bitcoin is really controlled by a very small portion of very wealthy entities. It is just concentrated at the top, and it's also very, very volatile. And so to rely on something like that for running your treasury or as a backup for um, something that is fiat but still has the full faith and credit of the United States government would also be a very difficult feat to pull off. So I don't think it's going to happen.
Yeah, there's some speculation that all these rumors are coming out so that it drives Bitcoin higher and like the big whales can get out and the public will be holding the bag when the administration comes in and disappoints.
Well, I think again, from the standpoint of a reserve, I just find that improbable. From the standpoint of looser, which is one of the other expectations, regulations on Bitcoin transactions, whether that manifests as looser oversight or however that might look. There's speculation which is driving up Bitcoin on the back of that. And there might be some fringe kind of deregulation of Bitcoin ETFs or markets or something, but the reality is that's not necessarily good for Bitcoin, really. I think people who invest in it want to know there's some sort of security surrounding it. So that could actually have a negative effect if there was too much deregulation of Bitcoin. But yes, I think that right now a lot of this elevation has been definitely related to this idea that there's a lot of support for Bitcoin in the government, certainly by some of the people that Trump has close to him, like Elon Musk, huge proponent, and so forth, and that people in power tend to want to sort of increase the things that benefit that power or that provide that fortune or whatever it might be. And Bitcoin is currently one of them. But I can see more volatility coming into it. There could be cashing out, there could be profit taking. On the same token, there could be write up of this current wave of, yeah, but there might be a reserve and we might have more deregulation and so forth. So I think it could go honestly in either way.
Yeah, so talking about the US, maybe we could skip over now towards the Fed, what you see in terms of the economy, interest rates. I saw that you do expect the Fed, well, everyone expects the Fed to
Yeah.
cut on the 18th. But as we've seen since September 18th, the yield curve has steepened quite a bit. And and yeah, maybe you can tell us what you think about that and how gold and silver comes into the equation.
Sure, and then, yeah, when they did cut rates by the 50 basis point first gamut, we had written about the yield curve steepening, and it will continue to steepen, and that's what has played out. Um, and it would be with 25 basis points. to close out the year, 100 basis points of a cut. And it's not just the Fed, the world is cutting rates. So what we have actually in 2024 is the same kind of magnitude of rate cuts that we saw in the wake of the COVID crisis in 2020. So it's actually quite an accelerated pace now, all of a sudden, of rate cuts at a time where the promises of sort of getting inflation down, or the expectations, or whatever, of getting the Fed getting rates, inflation rates down below 2% hasn't manifested. In fact, is probably going in the other direction, because at the end of the day, and we have a piece on this on Prins, the big lie, which we're calling it, is that the Fed can in any way control inflation, and that therefore the idea that their policy is just connected to where inflation is misleading. They have been cutting rates because the labor force has slowed down, because economies are slowing down. The conference board itself just forecasted 1.7% growth in GDP for 2025 in the US, adjusted for inflation, that's negative. And these are the reasons why, in the face of inflation that was going to be the thing that was going to be controlled, and until it got down to 2%, it was, the Fed at one point was positioning itself to not continue to, or start to cut rates, that they have to and will. And I think that we're going to basically see more rate cutting globally, because of growth, even with inflation throughout the world and with the Fed, into 2025. And I think that's going to actually spur a couple of things. It's going to spur gold as a knock on silver. We already saw that through much of this year on expectations of cutting. We saw gold dip a bit after the Trump victory. I think a lot of that was based on having that certainty that we know who won. We have a sense of what they're going to do. So the dollar kind of got a bid from that. Gold traded off, silver traded off, but now it's actually trading back up again, to the pattern that it's had really into these rate cuts, into this period of rate cuts. And I think that's going to continue into next year. I had thought that we'd see gold around 3,000 towards the turn of this year. We'll probably not get that high, but we've certainly seen that trajectory, and we've certainly seen it dip and now continue to go up, because at the end of the day, going back to what we were talking about earlier, central banks around the world continue to diversify their dollar portfolios by buying gold. China only has about 5% of its reserves in gold. That's actually low compared to other countries that have higher percentages, so it has room to go. It's restarted buying gold again, and we're going to see records from the central bank community hit again in 2024, and I think continue into 2025. I think silver has a dual value. It can be used as coinage, it can be used as a reserve component of a central bank portfolio. And of course, it has use value in developing infrastructure and in the energy transformation, as does copper, which isn't of use value on the currency side. But I think that as well, it's been rising, had a dip, and I think will continue to rise again in terms of just the energy transformation of everything, and sort of silver again caught in between gold and copper for that reason. But mining companies that own mines that produce gold generally have some copper ones, or vice versa, or at least the better ones do. So we're gonna see some of those price hikes kind of go together, gold, silver, and copper into 2025.
I noticed as well that the budget deficit in the U.S. Had a record start first 2 months of the fiscal year. Uh, how do you see Trump and the new Secretary of the Treasury handling that? I mean, I listened to one of Scott Bessent's interview before the election, and he said he's an admirer of Abenomics, which in my book would be really bad for the
It's
debt.
printing money, right? I mean, that's quantitative easing.
Yeah.
That's having the Fed buy treasuries. That's increasing debt. That's increasing debt to GDP. But I think whether he's a fan or not, I mean, or whether he is currently, versus then, that is the path that we are on, right? I mean, if you look at the negative yield curve, you look at the trading off of long-term treasuries relative to short-term, because we're in at least a semi-easing period right now. That means that the debt that the US has taken over these years is actually more expensive, which means that there are fewer buyers for it, which means that the curve continues to steepen because there's less demand for the longer term treasuries, which means who are the buyers of last resort? Well, it's the central banks, it's the Fed. and who get caught in between? It's the banks. And if the banks have any problems with liquidity, with some of the loans that are coming due, because like in commercial real estate and so forth, where rates have been higher and they're becoming more and more problematic, then the Fed's going to have to step in and will step in with some form of quantitative easing. That's very, it's very much like what we've seen. That's certainly what Japan had done, and what we have done in the past. That doesn't reduce the deficit. What it could do is reduce the pain of all the high interest payments that the U.S. has right now because of a combination of fast rising debt and more expensive debt because of the pivot until recently to higher rates, which they have to deal with. So I don't see how in that scenario and in what we're currently in right now, you start to reduce your deficit. I mean, the cost of what you're carrying is too high. And I think the desire of other countries to basically take our long-term debt is diminishing. I mean, we see that with the Chinese central bank. In 2018, they had about $1.3 trillion worth of US treasuries, and our amount of treasuries was like way down. And now that we've increased our treasuries by so much, they have about 750 billion instead of 1.3 trillion dollars worth of treasuries. So we're seeing banks, big buyers of US debt reduce their demand, and that increases the rate internally that the US has to pay, all of which bears on the budget, bears on the deficit. So even if there's a lot of cost cutting that happens internally in DC, even if there's this sort of structural adjustment of our government expenses, and look, there's a lot of stuff that can be cut. There's a lot of unnecessary costs, and there's necessary costs in the government. But I think either way, we're looking at a situation where our debt's high, our revenues relative to that debt are lower. If taxes are cut further for corporations, that's even less revenue into the budget. And I don't think cutting costs around the edges is going to dramatically impact any of that.
Just a final question before we wrap up, Nomi. Any opinion on the stock market, like the Nasdaq and S&P? They just seem to be just melting up. To me, it feels like it's forecasting more currency debasement. A lot of people always expecting a crash, but it never seems to come. Uh,
Yeah.
any view on that?
Yeah, it's interesting you say that because I was just on a interview earlier where that was, that expectation, like the Rockefeller, the Rockefellers are saying there's a crash. Warren Buffett's taken all this cash out of the market. Surely I I think if we step back and look at the capacity of central banks to reduce rates if there are problems with the financial system, which they would do. They've already pivoted to that, even though, again, inflation is not where they wanted it to be and won't be. Where quantitative easing is still at higher levels now than it was before COVID, for example, from the US Fed. We're supporting, there's a lot of support for the financial markets that is still in play and has been in play throughout this whole time. It's one of the reasons why our market has outperformed a lot of other markets in the US, and you see this sort of melt up type of thing. I think we're going to have a lot of volatility entering the market, specifically around tariff wars. And of course, if there's any events that happen geopolitically, as always, that are going to be targeted per sector, that can have days of just jagged movement. But I don't see a crash coming because I see the possibility of central banks uh, continuing to basically have that float for the market, which is, in this case of the Fed, about $7 trillion worth still of quantitative easing of assets that it holds. And if banks start to see more problems because of consumers, because of commercial loans and so forth, they're merely, the larger ones are merely going to require that help even more. And it might not be the public help from the Fed that it might be more like what we saw in the end of 2019 before COVID, which was that banks were really struggling for liquidity, and the Fed stepped in and raised its quantitative easing asset portfolio from 3.7 trillion back up to 4.1 trillion, which was just under the record 4.5 at the time trillion in the wake of the financial crisis. They didn't talk about it. They didn't call it quantitative easing. I mean, I did, but because it was, but they didn't. And we can see things like that happen, and the market's smart enough now and conditioned enough to look at every single way in which it has any kind of cheap money or financial support, whether that's money on the side, whether that's big ETF funds who want to keep markets up, whether that's a central bank, and look to that to fix any, ameliorate any major down move. And we've seen some of that this year. Just ultimately, the market's gone up, but I think we're going to see that again next year. We're
Yeah,
going to see some jagged moves, but we're going to see an overall uptrend because money is getting cheaper and financial support for markets and the largest participants remains in place.
yeah, they called it not QE during the repo crisis. I remember,
Yeah,
and the Bank of England did not QE in 2022 when
right. I remember that. I wrote about, yeah, exactly. Right. So whatever you call it, markets like that. And there's always this prevailing, well, yeah, but at some point they're not going to have enough, firepower to fix all this stuff. But we haven't seen that yet.
yeah, as long as they can just conjure it up out of thin air, there's the firepower, and people front run the purchases
That's right.
of those assets, and that's
That's
what they do. Naomi, it was really great talking to you for the first time, and
thank
hope we can do that again.
thank you so much. I really appreciate this conversation and your time.
You're welcome. And for the viewers, yes, it's Prins Sites with Nomi Prins on Substack. I've subscribed Nomi, and I think it's great value.
Thank you.
You're welcome. Take care and happy holidays or Merry Christmas and a Happy New Year.
Thank you, and to you.